When people hear about RSI, they often associate it with the retail trading strategy of buying when the RSI is in the lower 30% and selling when it's in the upper 70%. However, this approach doesn't always work. Instead, I use RSI to identify divergences which can be a signal of a potential trend reversal. RSI divergence typically occurs when price moves in the opposite direction of the RSI chart. In other words, RSI chart might display a change in momentum before a corresponding change in price. There are two types of RSI divergence: bearish and bullish divergence. So let's start with the bearish divergence. There's when the price is making higher highs, but the RSI indicator is making lower highs. This suggests that the momentum of the uptrend is weakening, and there's a possibility of a reversal in price direction, and a break below the overbought territory could be used as a potential selling opportunity, or could be used to trigger a new short position. Now look at the A and B points. If we draw a line between them, it is obvious that price is making higher highs. Now look at the corresponding A and B points on the RSI chart. Here, again, if we draw a line through A and B, we would see the RSI is making lower highs. This indicates a bearish divergence signal, suggesting that the momentum of the upward trend is weakening and there's a potential for a reversal in price direction. RSI bullish divergence occurs when the price is making lower lows, but the RSI indicator is making higher lows. This suggests that the momentum of the downward trend is weakening and there is a possibility of a reversal in price direction. Traders can use this signal as a potential buying opportunity. For example, if we have points like A and B on the price chart, and if we draw a line between them, it is obvious that price is forming lower lows. However, when we look at the corresponding A and B points on the RSI chart and draw a line through them, we can see that the RSI is making higher lows. So this indicates a bullish divergence signal. Now let's take a look at a real price chart example to see how RSI divergence can be used in the smart money trading concept. Here, we are looking at the 15-minute time frame of the euro-dollar currency pair. The market is currently in a bullish trend, as indicated by the bullish BOSs. After mitigating the higher time frame supply zone, the price reversed to the downside and reached the recent demand zone. The price created a small upward movement with white candles, but then it quickly fell and broke out of the demand zone with inefficiency. This price action created a perfect flip pattern. So, if you are not familiar with the flip pattern and its details, you can check out our previous episode on the smart money concept entry methods to learn more about it. We have covered the flip pattern and other important trading concepts in depth, so watching those episodes would be helpful to better understand how to apply these strategies in your trading. We should now identify the flip zone created by the wave that flipped the recent demand zone. Now in the next step, we want to look for possible entry confirmations, and for that, we using the RSI. And we will be looking for bearish divergence signals on the RSI chart. To identify a bearish divergence, we need to compare A and B points on the price chart with the corresponding A and B points on the RSI chart. If we draw a line between A and B points on the price chart, we can see that price is making higher highs. We also draw a line between the corresponding A and B points on the RSI chart, and it's obvious that RSI is making lower highs and indicates a bearish divergence signal. So guys, we have finally received our entry confirmation and it's time to place the sell limit order. I'll be placing the order at the lowest point of the flip zone and setting the stop loss a couple of pips above the flip zone. As for our take profit target, we will be aiming for the most recent unmitigated demand zone. Now that our sell limit order is in place, let's see how the market reacts. As we can see, our order has been activated and we have successfully entered the market. Now as you can see, our take profit has been hit, and the trade has been closed with a profit. This is a perfect example of how RSI divergence can be used as a confirmation for entry in smart money trading and how it can be combined with other technical analysis tools to increase the probability of success in trading. But before diving into the details of the premium and discount zone, it's important to note a crucial step in your trading journey.